Shares of Canadian Tire getting a bid today, a positive reaction to what analysts are calling a strong quarter. Of course, part of the challenge now is taking on Amazon in the age of online shopping. This is a key challenge for retailers like Canadian Tire, and one that is pretty capital intensive. Let's discuss all this now. We got the company's financial health and the sites. We have Dean McCann, the Chief Financial Officer of Canadian Tire, with us. Good to see you again, Dean.
Good to see you.
So the quarter, obviously, the street is happy with what they're seeing. I did notice a flavor in there of the fact that when it comes to taking on the e-commerce giants like Amazon, you have to move goods, you have to move them fast, and that does cost money. How do you meet that challenge?
Yeah, we have incredible assets, right, to meet that challenge, right? So I think I've said this before. I always say the best thing that ever happened to Canadian Tire was Walmart. Second best thing is Target. And I firmly believe that this change that we're undergoing right now with the new competition, new way of doing business, will be the next best thing for Canadian Tire over the next couple of years. So, and we're adapting really well. We've got great assets in terms of bricks and mortar. We've developed great digital capabilities, and we gave a lot more visibility to that, to the street and to the analysts, right, with the announcement of this quarter's earnings and some information that we put on our IR website. So we feel really good about our ability to compete and the opportunity that comes with e-commerce.
Now, when it comes right down to a customer going on the website, ordering something, and Canadian Tire getting it to their door, obviously everyone wants everything instantaneously. They want it fast. How big of a challenge is that to take on Amazon when they're promising 1 day, 2 day shipping?
Yeah, no, I mean, what's fascinating, right? If you think about all of our banner, I mean, Marks and FGL, they're, soft goods, that kind of thing. We do everything that they do, right? We can deliver to your home and deliver, same day, next day, all those kinds of things. We do that already. Canadian Tire Retail is a little different, right? We've got a 500 store network with forward deployed inventory right across the country. So that last mile effect, if you will, it's a costly part, as you reference. I think we've got an advantage with respect to that. But the reality is the mix of products that we sell, 200 different categories, right? We've analyzed every one of those categories. There are things that you want, you need it now. There are things that, customers willing to wait for. There's things that, that overnight, if it comes in a box, you want the coffee maker, we'll deliver it to your home, no problem. Or you can come to the store, click and collect, and pick it up there. We'll have it ready for you. So our objective is, I just want to sell it to you, right? However the customer chooses to buy it, we've got to be ready to basically fulfill that need, and we're doing that at Canadian Tire. We just announced, actually, that we're one of the largest retail players in e-commerce in Canada. We gave a number out, basically over $500 million in sales that we're doing already in the last year. So we're well positioned to take whoever comes at us.
Now, here's an interesting idea that, of course, you're competing with online, but you're competing with bricks and mortar retailers who are also online. BrandSpark put out an interesting thing, and we'll show it to the audience right now, about basically where the brands are beating Amazon. And SportCheck is in there in the sporting goods area. We talk about renovation, big appliances, Home Depot. I know that's not exactly Canadian Tire space. Is there an opportunity in a Canadian Tire maybe to start eating some of Home Depot's lunch?
Well, we've competed with Walmart, Home Depot, for decades now, quite frankly, since the early 90s, essentially, for both of them. So, I mean, they're great competitors. Rona's another one. I mean, they're all, or I guess it's Lowe's now, but I mean, they're all folks that we've got, basically history competing with. And and the methodology, right, which is really how the customer gets things, which is really what e-commerce is about, and whoever it is, Amazon or whoever is the player you put in that space. I mean, our objective is we've got great assets. We've got our secret weapon, which is our dealer network, right, and those individual entrepreneurs that are kings in their local markets. With those kinds of assets, we don't worry about competition. We love competition, quite frankly. We'll rise to whoever comes at us, and as long as we're delivering good value and doing what our customers want of us.
What do you make of the likes of IKEA, and I think Walmart does this as well, where people living in, the downtown cores of a city, and there's spaces at a premium, this whole idea of, clicking and then collecting it much smaller. I know you have a Canadian Tire up on Yonge and Dundas. It's still a fairly big commercial footprint, though. Do you think of getting into these small little boutique kind of places and right down in the city? Yeah,
no, we've done that. Real estate's always the challenge, right? Getting the space, right? But we'll be opening up in Liberty Village as an example in Toronto. In Calgary, we've opened an urban store in Calgary. Name escapes me, of course, as I'm sitting here. But so we're doing that in markets where it's available to us, and it works really well, especially, and that's where e-commerce becomes an opportunity, right? Because with that smaller footprint, you can still offer the complete offering of Canadian Tire, right? In terms of the customer, right? So. With the click and collect and/or deliver to home. So it's the extension, if you will, of the operator, or the extension of the aisle, as we call it, that comes to us, right, as a result of having that e-commerce capability.
When you take a look at the sporting good business, when you take a look at the Marks business, I mean, it's all under one big umbrella. Would it make sense at some point to start spinning some of that off and realizing value there for the shareholder that perhaps is not being recognized in the stock?
Yeah, well, the way we think about it in terms of creating value is, we redid our loyalty program. So we now have 9 million customers, right, that are a member of our loyalty program. So frankly, you're going to see us evolve over time to talk less about banners and more about, if you will, our natural marketplace, which is, and talking about that through the eyes of our customers. So start talking about what our customers buy from us. And our objective is to get more of a share of their wallet, have them shop more of our different banners. We want to sell a broad range of products, and probably an expanding, hopefully, range of products, a lot of which are own brands, in other words, unique to us, that customers can only get from us with great value. And that's really where we're going, is start thinking about talking about our business over time through the eyes of our customers and the various segments that we have, all a function of the power of this 9 million customer base that we have as a function of loyalty program, and the data and the analytics that come with that.
And the customer base also, you have a credit business, and there were concerns. People who want to bet against Canadian Tire will often point to the credit business and say the amount of debt Canadian households are carrying, the rate environment. How is the credit business holding up in terms of delinquencies?
Extraordinarily well. So one of the best measures of kind of measuring our business in terms of the credit quality, for lack of a better word, is the PD2 plus, like past due plus rate. That was flat versus a year ago, essentially up 1 basis point, so nothing. As well, I've said it many times, right? I get a little upset about this wringing of hands going on about worrying about the Canadian economy. I think the Canadian economy is doing quite well, thank you very much. And the only number to watch is unemployment, right? That's the one to worry about if that were to start to tick up. But the Canadian consumer has performed very responsibly and very well, right? And we see that in our credit metrics. We see no deterioration, no evidence of any deterioration whatsoever. So anyway, that's the information that we have, the facts that we have, right, based on the various windows that we have into how the credit performance is going.
I want to ask you, Dean, I'm not sure if this is the last time we're going to have you on the show in this capacity, because of course you're moving on. After you leave the role, what's next for you?
Yeah, I'm building a house in Florida. We're going to have a little fun. I've been getting up at 4 o'clock in the morning for about 25, 30 years. So plan to play a little golf and hopefully do some board work.
Obviously, you're going to be the first guy on the links with a wake-up time of 4:30 in the morning.
No, I'm going to try and change that.
Might ease up a little.
I might ease up a little, yes.
Always a pleasure, Dean. Thanks for joining us.
Thanks, Greg.